Hi everybody, Alex Employer from Expert Forex, and in today's video we're going to be looking at the possibility that there is an even better alternative to Forex Robots for the average trader. Now you might be asking, why are we looking at this? There are so many advantages to Forex Robots. They trade automatically for extended periods without supervision. They can be used to automate routine trading activities, and they are so fast. They can process huge amounts of information and present them in a very summarized basis very quickly. So there are lots of advantages to Forex Robots. But the biggest problem with Forex Robot is that there is this huge misconception in the Forex trading market. And the conception runs something like this. I can buy a Forex Robot with little or no Forex skills, and the supply will give me the settings that will make me rich. Now, I can't tell you how many people have that misconception, and I can tell from the support emails and the things like that that this conception is a major element in the Forex market. And nothing is further from the truth. You need manual trading skills like money management skills, risk management skills, lot sizing skills. You need to know how indicators work and how certain of the EA tools work. So you need manual trading skills. You also need robot trading skills. You need to be able to optimize. You need to be able to find settings. You need to be able to test the EAs and find robust settings that give you a margin of error where you can still even get the settings wrong and still be profitable. And then it takes hard work. You don't find these things in 5 minutes. You sometimes need to test 10 to 20 alternatives of that particular EA to find ones where you feel comfortable with. So there's this misconception in the market that exists. And furthermore, there are certain disadvantages of Forex Robots, and that's, I'm talking about if you trade them properly, these would be disadvantages. You need extensive manual Forex trading skills. As I've mentioned before, you cannot just start trading a robot with knowing very little about the Forex market and about technical analysis and how the Forex market works. It takes a lot of effort, time, and experimentation to find robust settings. Again, I've mentioned a few facts there, and you still need to be lucky to match the robot to the existing market conditions, because your robot's going to run maybe for 3 or 6 months, so the conditions are going to vary very much. But hopefully, if you've got a robot that trades in sideways markets, you're going to have a sideways market for the next 6 months. Or if you've got a robot that likes trending, you're going to have a trending market for the next 6 months. Those conditions are very unlikely to persist for such long periods, and therefore you always need to match the robot to the current market condition. If used poorly, they can consume your whole account. An EA can eat your whole EA. If you don't know about risk management and lot sizing and those kind of things, they'll just eat your whole account up. There are added costs to running robots. You need a VPS, you need to buy the actual EA, and we get so many requests. I've got an account of $100 and I want to trade this EA. You must do your sums, because the cost of a VPS, the cost of the EA, is going to be so much higher than the $100 that you've got in your account, and you need to do your sums about what kind of returns you need to experience to pay for that EA. Now, this is a funny disadvantage, but most successful Forex Robots traders have considerable EA and Forex trading skills and are very hard workers. A lot of people don't realize that. One of the other disadvantages of Forex Robots is that they average out success. When you are setting up a robot to trade for 6 months, you have to give it settings that will see it through those 6 months. And in that process, you are providing settings that have to apply in all market conditions. Now, I'll just show you an example of averaging out of success. Okay, so let's have a look at 3 transactions. Transaction 1, when analyzed on a manual basis, will have a target of 120 pips and a stop of 120 pips, and hopefully your result will be plus 120 pips. Then you have transaction 2, which is a target of 100 and a stop of 100, and hopefully you'll get a result of 100 pips. And then you have transaction 3, which has a target of 80 and a stop of 80, and the result will be plus 80. So that's if you trade it manually, and hopefully on a manual basis you will get a 300 pip return. And why your chances are bigger is that you can select just the greatest setups, the best opportunities, and you can then trade. Now a robot doesn't have that opportunity. Whenever they see a setup, they take it. So the robot, when you determine the settings for the robot, let's say you determine that over a 6-month period, a setting of 90 pip target and a 90 pip stop is a good optimal setting for this particular robot. Now the problem is, if that is the setting, you're going to miss that target and you're going to be missing that target of the first 2 trades, and your result overall could be minus 140 pips. Now this is a simplified example. I'm just giving you the concept of averaging, because obviously sometimes in the EAs you can build in following stops and break-even stops and all kinds of other things. From a simplification point of view, even with break-even stops and trailing stops and that type of thing, you still need to give an average setting for those particular items. So in this case, I'm just simplifying it by focusing on targets and stops. And here's an example where averaging can result in really poor results compared to manual trading. So be aware, EAs average your results out, and sometimes the averages can be negative. So then why do traders use Forex robots? Because basically the biggest reason is they don't have time to trade manually. They're either working or doing other things, and they're even sleeping, because depending on where you are in the world, sometimes you can't trade certain markets. So they don't have the time to trade manually, which is a fair enough reason. The next one is they don't have the Forex skills to trade manually. Now, that is a really bad reason, because you do need Forex skills, as I've discussed earlier, to trade Forex robots. You need to know what the market is like, the entries, the exits, the risk control, the lot sizing, the risk management, that kind of thing. You need to have a good knowledge of Forex trading and what the risks are. Then the other reason why they use it is they are lazy and hoping for success, and a lot of people fall in that particular category. And then the fourth reason that I've listed, and there must be a lot more than what's listed here, is they suffer from the misconception. And remember, the misconception is, I'm going to buy a robot, the supplier is going to give me the settings, and I'm going to become rich. So they suffer from the misconception. And then why do traders use Forex robots? Because they are competent at trading Forex robots. So the people that have taken Forex robots, got to know them, set them up properly, and have the skills to change the settings if things go wrong, or change the settings to improve the results of their robots, and can do that for a number of robots, so they're multi-skilled. Those are the ones that like trading Forex robots and should be trading Forex robots. Now what we're going to do now is I'm going to suggest to you an alternative to trading Forex robots. And there are many reasons why I'm going to suggest this, and I'll just go through that. Firstly, you have to acknowledge that every trading transaction is unique. It has its own support and resistance profile and requires tailored stops, targets, trailing stops, and tailored transactional management. So when the volatility is low, you go for small stops, for small targets. When the volatility is high, you go for large targets, and so on. So every single transaction is unique, and therefore manual traders have a big advantage over EA traders. Then secondly, you have to realize that longer term charts provide more robust results than the shorter term charts. And the reason for that is that there are variable speeds that operate in the market, and they cause you to be stopped out if you try to scalp or use very short term time frames that have small stops and small targets. And because of the natural vibration in the market, like for instance, in an hour, the market can naturally vibrate by about 15 pips, or in a 4-hour period, it could vibrate by 30 pips. You could end up what we call playing in the traffic, just exposing your stops to the natural movement of the market. So higher time frames give you more robust results. Now, the fourth one is manual Forex trading competence is easy and quick to obtain. Now, a lot of people don't believe that, and one of the reasons is that there's just too much choice in the market. There are just hundreds of techniques, hundreds of indicators, and people get totally confused with that particular offering. But to give you an example, what we often do, and last year I had a very successful group here where we do a Forex boot camp. So in other words, I had 6 traders that came in and did a course, and what happened was, over a 9-day period, all those traders did was focus on Forex trading and on simple Forex techniques that worked. Now, what they did over those 9 days was complete their Forex education enough to succeed. So we stayed away from all the things that aren't important, and we only focused on 3 main methods. You only need to know horizontal support and resistance, non-horizontal support and resistance, and you need to know momentum. If you know that, you have enough knowledge to trade the Forex market. So it's actually quite simple, and you can avoid all the complicated indicators and charting systems and everything like that if you know that. Now, after the 9 days, now 9 days is a long time, but it included 2 weekends, because weekends are actually very important for back trading, because those are the times you can actually sit and back trade these systems and build up a success record. But after the 9 days, these guys were so optimistic and so confident, and had achieved such success that they left here, they formed groups within each other, and they started trading together, and that was by far the best successful group that I've had. But it shows you it can be done very quickly if you do it on a focus basis, and you focus only on what matters, and you ignore what goes on in forums, you ignore all the fancy indicators and all that, and focus on the basic trading methods, and create a trading record that you can manage. Anyway, that was quite good. And one of the tools that we used was the Forex Test. Now, the Forex Test, what that does, it allows you to trade, back trade, let's say 2 years of trading in a couple of hours, because you're in control of the timing of the trading. So you forward the trading, you see a setup, you enter the deal, and it's as if you're trading live, but you're in control of the timing. So then after you've entered the deal, you say, all right, let me see if this deal is successful, and then you move on to the next one. The only way that you can back trade, because your time return is so big, you can basically trade 2 years of back trading within a day or so. So these 6 guys that came here, they gained 2 years of back trading experience in 2 days over a weekend. And that's the other beauty, is you do it over a weekend, so it doesn't interfere with your trading times. Thoroughly recommend this. I am a partner in this particular organization, so you will get a better price than the normal public if you use this particular link. You can compare the price to the normal price on their website, and you'll see that you get a better price. Just mentioning that this tool is essential if you're going to develop your Forex trading skills. Anyway, so let's have a look at an alternative way of trading the Forex market with the limitations of limited time to trade and that type of thing. So firstly, we've determined that the longer term charts, the weekly charts, the daily charts, the 4-hour charts are more reliable charts. So if you're trading those kind of charts, you don't have to look at the charts that often. I mean, the daily, you only have to do the daily, the weekly, almost weekly, and the 4-hour, you can look at most probably once a day would be sufficient for those. So suddenly your time requirement reduces right down. You don't have to sit and watch the charts all the time. You can do it in the evenings when you come home, or you can do it in the mornings before you go to work, and that's all you need to do. So that's why I call it the lifestyle trading technique. You can focus on 3 basic techniques: momentum, non-horizontal, and horizontal support and resistance. Really simple techniques, and within those techniques, they are so simple, you can pick these things up within days. As I said, you only need to review the charts once a day, and then you can do some detailed work over weekends. Now, the detailed work is analyzing the charts in a little bit more detail for the next week, but you can also do some back trading over weekends. So you are using the times that don't matter very productively. And then what this trading style does is each trade is unique. You can then enter stops where they should be, targets where they should, or you could decide not to trade. If the market isn't looking good, just don't trade. Something an EA cannot do. And the beauty is you can automate this trading. So you can use things like pending orders. So what you say is, if the price goes here, I'm expected to bounce from that support or resistance level, or if the price goes here, I expect this kind of behavior, a breakout or something like that. So you can use your pending orders to trade into the future. So you don't need to watch the charts. You can and when you process a pending order, you can put a trailing stop in, a target, a stop. You don't even have to watch the transaction after it has activated, because it's completely automated. So that's why this is an alternative to automated trading, because it is automated trading, but the decision making is on a manual basis. Things people say, oh, but I'll get emotion. You don't need to get emotional, because we'll cover that in the next slide. There's no need to get emotional about trading, because firstly, you've made your decision when you're calm and there's no emotion involved. You've decided on a particular trade, and you can put it in and leave it, because it will manage itself. Manual trading, in fact, takes less effort than robot trading. Your return on effort is so much higher, because remember, you need to be competent at manual trading to even trade robots, so that you know what to do when they go wrong and all those kind of things. So you need that kind of knowledge anyway. But the optimization, the testing of 20 alternatives, all that eats your time so much that you might as well just trade manually. Then the costs are less, because you don't have a VPS cost, and you don't have to buy the EA. You just trade the charts on your broker account. You have better risk control, because you can decide whether not to trade, or you can decide to trade with fewer lots or more lots. So your risk control is a lot more managed. You can decide the market's a little bit volatile, I'm going to use bigger stops, smaller targets, that kind of thing. You can make better trading decisions, because you might have 5 really good setups. You can then only choose the best one out of that 5. You can make really much better trading decisions, and you get better skill development, because you see the results of your trade. So you look at the result, and the one goes positive, that's great. The other one goes negative, and you say, now what could I have done to improve that? Was my trailing stop too small? So you're actually improving your trading skill with every trade that you do. And automation is still possible. For instance, we've got an EA called the double in a day technique. So you trade manually, and if you want to top up your trades, you use the double in a day EA, and it will automatically manage the topping up of your trades. The grid trend multiplier is another one. If you want to trade on a grid basis, you supply the entry, it will then trade on a grid basis and exit when you want to. So there is still automation possible, and there's also, you don't even need to use EAs for automation, because as I've mentioned earlier, you've got pending orders, you've got trailing stops, you've got top stops and targets and all kinds of things that you can pre-program into your trading. And then, which is also becoming quite important for US traders and European traders, is you have less exposure to margin and leverage and FIFO problems and hedging problems. So you always aware of what your margin exposure is, your leverage is, if you're heading for FIFO problems or hedging problems. When you're trading manually, easy to avoid hedging. You just don't trade. Take the same trade in the same currency in the same way, or even in the same direction. So you can control those areas so well that you aren't exposed to FIFO, margin, leverage, or hedging problems. You've got full control. Whereas an EA can easily fall into a hedging situation without you realizing it, or run into FIFO problems and that type of thing. So if you want to learn more about the lifestyle technique, there is a whole section on our forum, on our Money Making Forex Tools forum, and you can go there. You can see there's a whole section there. It's been going for quite a long time, and you can have a look at the lifestyle trading process. For instance, there's some free courses. There's a free channel trading course. There's webinars that we've done. There's actual lifestyle trades that you can go and look at, and there's videos and all kinds of things. So if you are interested in looking at an alternative to EA trading, and quite honestly, the training for this you can do in a week or two. You can perfect it with another week or two of back trading, and suddenly you've created a Forex trading career with a lot more control, because you're relying on the EA to perform for the rest of your career, whereas here you're developing a trading skill which is independent. It belongs to you. You take it wherever you want to. You can go and trade cryptocurrencies, you can trade indexes, you can trade all kinds of other things with the skills that you develop here, which is something that you cannot always do becoming an EA expert. So please let me know in the comments of this YouTube video or in the forum itself whether you think that the lifestyle technique could possibly be an even better alternative to robot trading. I personally think it is, because you're only concentrating on three basic techniques, which I've mentioned before, is momentum, support and resistance on a horizontal and a non-horizontal basis. Once you've mastered that, you've got a skill for life. You do not have to rely on an EA and the EA matching the market conditions that produce really good results. I look forward to your comments and any questions that you might have. From me, Alex Deploy, cheerio.